Hey guys, welcome to this MF Corner special. I'm Pavitra and today we're going to discuss the very interesting category of Flexi Cap funds. Now this space is becoming exciting specifically after the big rally that we've seen in the broader market. It is the one category that allows a fund manager full freedom to really do as they please and allocate the way that they want to. So to discuss this space and help you decide if this is actually a good pick for you or not, I have with me Kalpesh Ashar from Full Circle Financial Planners. He is a certified financial planner. He's also a SEBI registered investment advisor. So he's just the person to take us through all of the questions that we have on this category. Kalpesh, as always, thank you so much for joining us. Like you know, I have a whole set of questions that I want to come to you with. But you know, the first one is that considering this category is perhaps the only one, right, where a fund manager can do exactly what they want to, they can allocate the way that they want. Do you think anyone who's looking at an equity investment from a long-term kind of view should definitely add one of these to their portfolio?
First of all, thanks, Pavitra, for having me on the show, and always a pleasure talking to you. Like what you said, that this flexi-cap category has been there now for a very long time, and post the SEBI recategorization in 2018, I think lots of things came into prominence because of the other things cropping up. So this category, like the tried and tested, and the definition is that the fund manager has the complete mandate to take a call across all the categories, that is large, mid, and small, as per his own, judicious call, what he wishes to do, and there is no mandate on the percentage.
Yeah.
So by that nature, it becomes I would say, a true blue, mutual fund feature, where you leave everything on the fund manager's discretion, who is a professional for sure, and he decides for you what is the right mix at a point of time. And like what you rightly said, it is a must that if you want to stick to the mutual fund characteristics, this should feature in everyone's portfolio, but surely after a lot of scrutiny, and also looking at the person's, the risk profile, and also more importantly, his mix of large, mid, and small according to his financial goals.
Yeah. Oh, absolutely. And I will come to you to, help us understand how we should pick within this space as well. But Kalpesh, something that always comes up when we talk about Flexi Cap is that because the fund manager has complete sort of freedom to choose how he wants to position this portfolio, it can lead to some kind of an overlap, right? For example, if I already have a mid-cap scheme and then my fund manager goes and decides to really increase the mid-cap allocation within this Flexi Cap, it could cause kind of an overlap, right? Do you think that is a concern with this, and you have to position all of the, rest of your schemes also keeping that in mind?
Spot on, Pavitra. And that's exactly the reason why I said in my earlier answer that you need to understand each person's profile and his existing mutual fund scheme mix. So that's precisely the reason. But contrary to this, Pavitra, if you go into the actual, fact sheet reading, and how these flexi cap funds have been positioned in India, you will find that the most of the dominance in a flexi cap fund is always tilted towards the large cap space. So that is, and it stems from the fact that probably the fund managers, although they are given the mandate, they really don't want to take a very adventurous call. Now, whether you call that an advantage or a disadvantage, that's an open for discussion topic. But that has been the trend. So like what you quoted an example, hypothetically, if you already have a mid-cap in your portfolio, and for example, the fund manager in a flexi scheme decides to swing the mandate for a period of time towards the mid-cap, you could be having a mid-cap exposure. But the trend factually shows that right now the tilt of late, for I think a stretched period of time, has been towards large caps.
Okay. All right, that makes a lot of sense. Also, Kalpesh, come in on, any other points that you feel like an investor should consider before they get into this space, any risks that they should keep in mind? Of course, you've mentioned this one, but is there anything else that you feel an investor should know about this category?
So like what I said, I'll just put a figure to it. Pavitra, I did some, fact finding on that. That today, out of whatever 35 to 40 flexi cap schemes we might be having in the entire mutual fund space, approximately 80% of them are having large caps and that categories in their holding, And in that, 80% of them have 75% in large caps and 25% towards the mid and small cap category. And only around 20% of the schemes have a mix of around 60% in the large cap and 40% in the mid and small cap category. Now, why I'm implying these figures is that probably in a portfolio, if you are looking for outperformance and you only depend on a flexi cap fund saying that this is the one and all I would like to invest, you could miss out on an alpha generation which a mid and small cap could give you. So because the tilt is always towards the large cap, and I have in my experience rarely seen that an entire mandate of fund managers has tilted towards that risk taking zone in any phase of market. And again, I'm supporting that view also because they don't really want to be caught napping on the wrong foot, that the mid and small cap rally has eluded them, thereby not having an alpha in the flexi cap schemes. So it is a very important category. It gives the mandate, but again, like a prudent fund advisor, I would always say that have a proper mix of large, flexi, mid, and small according to your profile, and monitor it.
Yeah, but I'm glad you're bringing all these points to the fore, because in a lot of cases, an investor could perhaps, decide to take a call where they just build a flexi cap portfolio, right? Where they themselves say that, okay, I'm going to have one mid cap scheme, one small cap, one large cap, and position it that way. But, since we are talking about the flexi cap space, Kalpesh, what do you think is the minimum time horizon that someone should have? Of course, this is an aggressive investment overall. So what do you think is a minimum kind of time horizon that you should keep in mind if you're looking at this category?
So like I said, that this is a true blue, mutual fund characteristic type of a scheme. Obviously, the true blue characteristic of any long-term investment which is associated with mutual funds holds true. So I would not put in any money in a flexi cap fund if my time horizon of investment is lesser than 5 to 7 years. So the real juice or the real benefits, I think, would accrue looking at the economic cycles or looking at the, stock market fluctuations and everything. A 5, 7, and a 10-year period is an ideal mix for a flexi cap fund.
Okay, got that. So that is something that our viewers should definitely keep in mind. But Kalpesh, now let's come around to picking from the funds that are available, because we have 35 flexi cap funds which are, currently available to investors. So how do you pick? Because this is perhaps a fund where picking the correct fund manager is extremely important. Do you sit, looking at that? Do you get into the sector tilt that these funds have? How would you recommend we go about it? And also, I know something that you do mention earlier as well, and you have spoken to me about, is that a few of these also do offer international exposure, right? So do those automatically become more attractive, or, do they stand out? And if yes, then who should look at them?
Yeah, so I think, like I mentioned, that, of all the fact finding and the research we keep doing in every space, not only flexi cap or something. And like I mentioned earlier, the findings which come out is that you have a tilt towards the large cap space. Now, when you are creating a portfolio, if you have too much of, you're risk averse, and you already have taken one or two large cap schemes in your portfolio, say an index fund and an active large cap fund, then how much percentage do you allocate to it becomes important. Now, if you were to select a flexi cap fund just for the name of a flexi cap fund, and it's again going to invest 75% of your money into large caps, obviously it doesn't make sense, because then all your alienation of that schemes moves towards large cap. Now, I would rather have a portfolio mix where, like this couple of funds, or in fact there are 3 to 4 schemes in the flexi cap space, which give a little bit of a different flavor. In Hindi they call it hatke funds, which is nothing but their exposure to your international funds. Now, this is one feature of the flexi cap scheme which is mandated, is that flexi cap funds are allowed to invest in international funds, whereas multi-cap funds are not. Because there's a very thin line. Sometimes earlier we used to discuss that between a multi and a flexi cap, till the time SEBI came straight on it, saying that in a multi-cap fund, you are mandated to have 25% each into large, mid, and small. So it's compartmentalized, and the remaining 25% is as per the choice of the fund manager to tilt wherever he wants to. So in a flexi cap fund, that choice of investing in international funds to add a little bit of flavor is available. And I think that's a big plus. And without naming the scheme, there are 3-4 schemes which, because of that little bit of flavor, automatically tick the box of investing in a Flexi Cap fund. So I think those people who would not want to invest directly into international schemes are not probably equipped to do that. I think those are the people first who could select these schemes quite judiciously, have that little bit of international exposure. That's not the only criterion, but that is a little bit where it's different. Otherwise, I personally feel that you could be also doing a good job with your fund advisor or your distributor who manages your portfolio of having at least, just I would say around 20-25% of your portfolio in a Flexi Cap fund, and then divide the others in the category according to your risk or your goal targeting into a mutual fund portfolio.
All right, that's very useful information. And also, the constant debate between should you go for a Flexi Cap, should we go for a multi-cap? This feature that you highlighted, I think for some people could solve that problem. But, on this entire Flexi Cap versus multi-cap thing, how do you really pick? Is it that if you already have a decent amount of large cap exposure, you should avoid the Flexi Cap, look at the mid cap? Is that one way to look at things?
Yeah, I think that is the way to look at it, because what happens is that by default, automatically, if you choose a multi-cap fund, you are getting into a space of mid and small by a particular allocation which is mandated, and your diversification takes place. Now, the only thing which could go wrong or right, probably it swings both ways, is that remaining 25% in a multi-cap fund, how the fund manager decides to swing the pendulum.
Yeah.
So in a multi-cap fund, probably your choice of being more spread across all the categories is larger than a Flexi Cap fund. But obviously, when you say it's being spread in all the categories, the amount of risk also increases. And as we know, risk and return go hand in hand. So it could, you could be having a portfolio where you could be generating an alpha, but in a little bit of a bad phase or a bearish phase, that same multi-cap fund could be underperforming as well if mid and small caps do not perform.
Yeah. Oh, absolutely. I completely take your point on that. And with that, Kalpesh, we're going to wind down. Thank you so much for joining us and squeezing all of that information, which is going to come very handy to any investor looking to get into the mutual fund space, into this quick 15-minute chat. And thank you guys very much for tuning in. We'll be back very soon with lots more on the mutual fund space.